Hello everyone, and welcome to today's Q&A session related to Module 1 about balance sheet, income statement, and accounting transactions overall. As well, we will take a look at the homework. You might want to ask some homework questions, and you also might want to ask questions about course structure or next lectures, or maybe you will have questions about today's material. So let's see. I see I have several questions here. The unanswered ones were the ones which will require some research from myself. Let me know if something is wrong with the sound or with the picture quality. Let me take a quick look if video quality is good enough. If you think that video quality should be better, you need to click that widget button on your YouTube and adjust the quality to 720p if it's not selected here. Let me see. So now it will be a bit of a recursion here, but I think it should come up good enough to see. And I will also try to keep everything a little bit zoomed in. So I haven't got new questions about course in the file. I have the one from previous Q&A about QuickBooks Accountant. So if you registered a free QuickBooks Accountant, it's free and it should be free forever until maybe Intuit, QuickBooks decided to change the rules, but that may never happen. That account is supposed for your books as a bookkeeper or accountant of some other companies. So if you want some business to be set up in Intuit QuickBooks, you probably need to open a separate business account for that business, and that would be a paid account. For free, Intuit expects you to run just your bookkeeping business books or accounting business books as your bookkeeping or accounting practice. Also, you can take the free certifications with Intuit, and you can do some training transactions there, assuming you can delete them. So you don't want to kind of overcomplicate everything. And I also think that it's not a big deal if you close one account and re-register another account. Just make sure that you kept all your certifications. So I see people are coming in. Let me know if something happens with the quality. Let me know if you see delays. I'm trying to kind of improve streaming quality, so I try to broadcast 1600 times 900p. It's a bit better than 720p, but I don't see that YouTube allows me to broadcast with such quality. Okay, so let's continue. So no new questions. If you got any questions, please ask in the chat or in the file. What's our plan for today? We plan to cover homework. We plan to do a lecture review, and I made some extracurricular activity where we will go find PwC, PricewaterhouseCoopers audit guides, and we will look into financial statement preparation guide, and we will see what high-class audit literature, high-class accounting literature has to say about the balance sheet structure. So let's begin with the homework. As you might have already found out, homework number 1, it's the second one after 0. I started everything with 0, but I will probably change it in the next run of that course. So homework number 1 is basically assumes that you want to practice transactions for if you want to practice transactions to make a balance sheet, and if you want to practice transactions to make a trial balance. And let's see how does it look like in our training file. So first step, we go to homework file. Here I have an instructions, and I also have my file, copy me file, right here. And in that file, I have balance sheet, trial balance, and transaction list. And I also have an income statement, but that will be our next homework. So far, we are working with the trial balance and transaction list. You might notice that I've got I had one column with numbers, and now I have 4 columns with numbers. That will also be as one of the subjects of next lecture. But for those curious, I will just add that these are different types of accounting basis. So the standard one, the default one, is accrual basis, the one which is recognized by US GAAP. I will add here US GAAP, but IFRS as well. So accrual basis assumes that you recognize costs and expenses when they are incurred and not exactly when they are paid. The moment of recognition might be the same between when you incur the expense or earn the revenue, but it can be different. For example, if you bought some plumbing services and you promised to pay your plumber in 30 days, I don't think any plumber will take that, but anyway, if you buy plumbing services and the plumber provided you with plumbing services, the question is, when do you want to recognize that? And under accrual basis of accounting, you recognize that when the services are rendered, basically on the first day when the services are rendered. And under cash basis, you recognize the expense when you actually pay to plumber. So for small businesses, you might want to run your books under the cash basis. But here comes the IRS. To pay taxes, you can also select 2 different bases. And that also can be a cash. They have different rules for cash basis accounting and for accrual basis accounting. So basically we can have 4 sets of books. One is a general one. So if you are a small business, you want to choose between accrual basis accounting and cash basis accounting for your internal reasons. And you also have a modified, which is in between. That's kind of complicated. But then when tax time comes, you can also calculate your tax liability based on cash basis, which will not actually correspond exactly to accounting cash basis. Or you can run your tax accounting on an accrual basis, which will correspond most of the time with accrual accounting basis, but tax treatment for various items will be different. And here when we will learn a bit more of transactions, we will run 4 sets of books. But I think we will just skip accounting cash basis, because we have tax cash basis and it is different from accounting cash basis anyway. So I don't see much reason to study cash basis, accounting cash basis. But we will see along the way. So let's not overcomplicate. Let's concentrate here. This is our transaction list. And as you might see, I added some cash basis stuff here, but you can disregard it. And here in orange, we have our trial balance accounts. And we should have same accounts here in trial balance. Let me highlight that by the orange. So as you might see, we have accounts here, here. So yeah, this should also be orange, and this. So these orange are the ones which we use in transaction list. And when you make new transactions, you just want to check if your accounts either match these ones, or if you need a new account, you need to add a new account here. And the easiest way, the kind of automated way to check that is to use a lookup function. On my worksheet, it's set up in column O. So if I want to check if any of my accounts are on my list, I go here and I just copy lookup formula. Let me try to modify my worksheet a bit. I will freeze some panes. I will freeze it like here. Oh no. Okay, I can't actually do that. Okay, so view, freeze up to current row, view, freeze up to current column. Okay, so I kind of freeze a part of the screen so that part will stay frozen. That's also got good function, good spreadsheet function. And when I do lookup, I look for that item. I separate them by comma, and I look up the items from that table, which starts from column C and ends in column E. And I use a third column, and the last one is 0 by default. So if there is such account in the trial balance, the lookup will come up with a number, and that way I know, okay, that account is on trial balance. And if I say it's cash 23 account, that account is obviously not on trial balance. So if that is so, the lookup will show NA. So I will fix it back. I'll fix it back to cash, and it will come back to 436,000. Okay. So that way you can check if all your accounts are on a trial balance. Then let's see for instructions. So your trial balance balances. Hopefully that is so. Send me, tell me in a chat if you have problems with balancing trial balance, and tell me what your working file is, like what's the name on your file, and we can look into it and fix it right now. The second part of the homework. So don't be concerned at that point if you have the same transactions as I have in your file, or if you have a different set of transactions, because everyone's file will be a bit different. That's the idea of the homework, that everyone can produce his own data, his own accounting data. And so far we have time to look into everyone's homework. So don't be afraid if totals are not matching between my file and your file. Okay, we have a question from Svetlana, team number 4. Team number 4, Svetlana. Okay, trial balance. Okay, Svetlana has some nice formatting here. Let me see. So totals are not messing up into the file. Let's do a lookup check. Let's do a lookup check. Okay, I see. You can, if you can send me a question while I'm doing a lookup check, that would be great. Oh, I see you have questions inside the transactions. So customer 1 paid for the pre-order needed items 3000. Accounts. So customer made a prepaid. Okay, that's an interesting one. So customer make a prepayment, and basically that means that you received cash. Let me try to fix it in comment. Cash. So you obviously you received cash, and that's my preferred way to think about transaction. If I think that cash is involved, I try to figure out if that is cash inflow, then it's debit. If that is a cash outflow, then it's a credit. Now, so they have pre-ordered the needed items. Now it's a question whether we shipped them the inventory. So it looks like that we haven't shipped the inventory yet. So if they pre-ordered and we haven't shipped them items and we received cash from them, that would be like a liability. And the liability will be prepaids received from customers. Prepaids received. I fix it just here. I will adjust it to orange one. And let's see if we have it here. Accounts payable. Okay, I will add it. I will add it to the standard. That's not surprise. I'm not surprised that you have problem with that, because it wasn't on the list here, as probably many other account, because we cannot reflect every operation. So basically the transaction here, I'll probably have to fix it. So I will see that trial balance works. So you debit cash, you received cash, that's an asset, that's a debit. And you credit prepaid receipt, that's probably a new account. How? So the question is, how you might have been able to figure out that yourself and not waiting to ask me. Let's see. Paid for pre-order needed items. Предоплата от покупателя. So we can how to reflect prepayment from customer. Let's see if Google, we have a link from Intuit QuickBooks. Oh, they have you entry. Accounting tools. Accounting. Yeah, it's not that easy even to Google that, because no one provides you like an easy answer, and they yeah, it can take some time to just prepaid insurance, prepaid expense. So that's when you pay for prepaids. But what if you received prepaids? Yeah, it's probably not an easy one. Okay, let's go back. As you might see on trial balance file, that doesn't cover VLOOKUP doesn't find that that account. So what we want to do, we want to go to your current liabilities, and we want to add that account here, prepaid receipt, and we just include it in trade and other payables, and we need to update that formula. Okay, so now trial balance balances. Let me see how to account for production. That's great question. So when you produce raw materials, you use raw materials. Okay, it's probably a bit complicated transaction, and I strongly advise you to make two separate transactions, one for production and one for revenue when you sell stuff. So that way it won't work. I will put how I understood the transaction. So you basically bought 3,000 of inventory of raw materials. So then you send those raw materials into production, and so that will be 3,000 credit. You send them into production, and since you apply your own labor, you do not capitalize the labor cost into inventories. If it was a third-party labor, you would have need to capitalize third-party labor into it. But we will touch that in the future lecture. So far, you just need to add inventory needed items, and that will be the same amount, unless you capitalize something else. But when you are sole proprietor and you use your own labor, you just capitalize raw material cost. You might probably allocate something else, but we will touch that topic a bit later. But so far, you just transferred 3,000 here. Okay, manufacturer. I will add a comment here. You might need to allocate your other production costs. So accounting for costs is like a separate course in the university. It's not that straightforward. But so far, in your situation, it's just a transfer from raw materials to goods produced. And now we sell the items. We basically sold. Oh, it's a bit still a bit complicated for me. So I assume that what you mean is that you produced needed items which you can potentially sell for 5,500. Then you send a customer. Then you send the customer so when you account for inventories in your files, you need to use your costs, and unless you see that your inventory is impaired, that you can sell it. If you can only sell it below your cost, then you need to adjust its value to the lower of cost or net realizable value or net selling value. But if your selling price is higher than your inventory cost on a per item basis, then you do not increase your inventory value. So your inventory, in that process, your inventory value stays the same. But now you kind of sold, okay, let's say sell sell 2000 worth of inventory. That's 2/3 of available volume. So you need to know the cost of your inventory, the cost to produce, and you need to know how much you sold, how the volume of the cost which you sent to the customer. So that way, so we will credit 2/3 times what we have here, and credit will be with a minus. Okay, let's put minus here, and debit so we received cash. Let me highlight this with yellow. We received cash. We already received cash. We had a prepayment. So that part, that part will go to cost of sales. That part will go to cost of sales. And now we need to record revenue. And to record revenue, oh, sorry. We know that revenue is a credit. We received it anyway. And that revenue was, so I assume we just realized full prepayment. We realized full prepayment from customer. Just a second. So prepayment. We debited cash, we credited prepayment receipt. Now we need to realize the revenue. Revenue. Yeah, revenue, credit, debit, prepaid receipt. So we basically earned $1,000 profit on that transaction. And that one, so you do not increase your inventory value in excess of costs. Just the fact that you can sell inventory for more than you spend on it, it doesn't mean that you can recognize that gain before the moment you actually sold the inventories. So in that situation, I just allocated 2/3. I assume that you sold 2/3 of your inventory, and basically 1/3 stayed. I will kind of move a bit these transactions here, so they will not go into trial balance. I will keep it yellow up to here, so you will remember what you had there. And I will just run a check for trial balance if I need to add any new accounts. Okay, I don't. So that one wasn't. That transaction needed an adjustment. Basically, what you did, you transformed raw materials into finished goods. Raw materials reduce, finished goods increase. In some circumstances, your finished goods some other expenses will be allocated to your finished goods, like if you used someone's labor. But that's already complicated. That's complicated cost accounting, advanced cost accounting. We might touch some of that later in the MIT lectures. Then you sell the inventory, and you need to understand how much of your inventory you send to the customer. In our case, I said that it's $2,000 worth, so you need to know the cost of the inventory which you sold, and you reduce your inventory by that amount of costs, and you debit it to your cost of sales. And then you need to recognize revenue and reduce your prepayment when you actually shipped the products, when title transferred to the customer. You recognize revenue and you reduce your prepaids. So let's see, does our trial balance? Yeah, it balances. And now let's take a look at the third question. Donated like a gift for customer. That's you come up with the three very I would say pretty difficult transactions, not straightforward, because you should not use donated. I will highlight that. Let me add a comment here. So charity is a special item. Charity is a special item on your tax return, and if you run a LLC, if you are sole proprietor, or if you have a LLC which is taxed on a flow-through basis, flow-through accounting, basically you have a business, but on all of the net profit, all of the income of that business, you are taxed like an individual. Or you might have an S corporation, which is also have a flow-through status. Your charity does not reduce your business income. Your charity will flow through your individual tax return, and if you do if you take not a standard deduction but itemized deduction on your tax return, it will flow into your individual tax return itemized tax deduction on charity. And that's so. But then you start with donated, but then you tell like a gift for a customer. So it was like a promotion gift. So promotion, if that's a promotion, then you can reflect it in your cost of sales. But you should not use words. You should not use words which can be treated as a charity. If you do it yourself or you send that file to some CPA or bookkeeper, they might confuse that like a promotion material and a charity. So what do we do with a charity? Yeah, basically you did it correctly. We can also say, depending on the circumstances, we haven't created it yet here. So we might want to create, in my file, I already did that. Let's see what I have. So in my file, I already added selling, general and administrative expense. And you might want to create an advertising account if you want to have a income statement presentation to be nicer. But for the purposes of small business, you can keep it in cost of sales. So everything balances. Yeah, you come up with very good examples. If you are okay with that, at some point I might take these three of your transactions and copy them to general file, because charity donation example is a good one, because it just very not straightforward, because it starts with a donation. That one, you might want to just have it separately. Oh, sorry. Sorry, I see. I also have a comment regarding this one here. So that one, you need to separate it in several transactions. And we did it here. It's actually 3 different transactions. When you manufacture, it's one transaction. So manufacture. Then sales. Sorry. Okay. So this is cost of sales, and that's revenue. Yeah, so that's basically 3 transactions. Okay, when you bought raw materials for 3,000, even though you received a prepayment from a customer, when you pay with this money, you pay from your own cash. You do not kind of treat every customer's cash as like a separate cash. You treat it as your own cash. There might be a situation when you actually needed to kind of take deposits from every customer. For example, if you are a landlord and if you get security deposits from your tenants, from renters, when you get security deposits from renters, your state laws might require you to keep those deposits in separate account and do not commingle them with your own money, and do not spend those money outside of your tenant contract, outside of your rent contract. In that case, you will have like a physically separate account in the bank for that cash, for security deposits, and you might be able to kind of call it cash, security deposit or customer deposit. But in that, when you run a business and you receive money and you use this money to buy raw materials, it is kind of your cash. There might be contracts when there might be other situations when you kind of need to account for the money for each customer separately. But that's not a standard situation. The standard situation is you received cash from a customer, so now it is kind of your cash. You have a liability to that customer, but it doesn't mean that every dollar of your cash matches that liability. You can pay that liability with any cash, or you can take a loan to repay the customer back. And that's why when you buy inventory, even you do that with this money, you just credit cash. So you credit cash. You credit cash, and yeah, you bought inventory raw materials 3,000, but you credit cash, even though you received it from customer. So as I see, you kind of trying to fit in several operations into like one sentence or one entry. So like you got prepaid here, and you think, okay, I got prepaid and now I pay with this prepaid for something else. But you actually pay with cash, and you need to remember that it by default 99% of the time, if you received prepaid, you debited it to your cash, and then if you pay for something, you pay it with your cash, not with prepaid. Otherwise, you will close that prepayment. You will no longer owe your customer that prepayment only when you will generate a revenue. When you generate revenue, when you deliver actual goods to that customer. Or you will also be able to send that customer money back if they change their mind, or if you agree on something else and you need to change to send money back. But these are 3 or 4 great examples of transactions. Let's see. You have a trial balance here, which balances. I see you added items. You might see that, okay, prepaid received. So prepaid received is actually 0 because we delivered the amounts to client. Let's highlight that. These are very good examples. I couldn't come up personally with examples as good as these, and we will also, when we look at the tax accounting and cash accounting, we will see we will get a great value from these examples. So that's basically here, you got that. And for example, what happened to the knitted items? So we produced 3,000 knitted items, and we sold 500 here, like a sent as a gift, like a promotion. And we also recognized in cost of sales. Let's use blue one. So basically we have 500 left, and if you go to the trial balance, we will see that we have 500 left here. Yeah, your file looks great, Svetlana. Let's see what we have on the balance sheet. So check works, and let's see. So we have equity 620,000, we have liability of 321,950. Yeah, so everything looks great here. We just make sure that every trial balance account is mapped to the balance sheet account. Anyone else questions? Tomorrow we will do similar exercises as we do today, but in Russian. If you come up with any new questions, it will basically be the repetition of the today, so you might want to skip that if I explained it good enough in English, or you might want to just for your learning purposes take a look at what we did with the Svetlana file, and maybe you want to do the same with your file, so you will have an opportunity tomorrow and another one on a Saturday, but I don't think we will have a lot of time on Saturday to come up with everyone's homework. Okay, I'm waiting for your questions. Let's see, that's my file, and my balance sheet doesn't balance. That's not a good news. Let's see. Okay, my trial balance doesn't balance. Let's see what happened. So this is my lookup. I made quite a few transactions here. Okay, I have some accounts receivable account here, which I probably need to call differently, accounts receivable trade. Okay, so I found one which doesn't balance. So currently I'm going through all my trial balance accounts. Okay, I've got prepaid rent, I've got rent expense. So my accounting got more complicated than it was in the previous lectures. What you can learn from that is that you can go when you are working on your own company, you can go into my file and see an operation here. And if you haven't done similar operation in your file, you might want to kind of rephrase it or copy or redo it or reimagine it or just copy it as is. Let's see where I have it. Okay, prepaid rent. So prepaid rent is an asset account, and that should be in the asset. Okay, let me add here. So that will be in that group, and that will be here, and that will be here. Still not balance. Let's see something else. Okay, insurance expense. Insurance expense. Okay, now it balances. Let me make a quick look if I got everything included. Okay, and for these transactions, I just I just skipped these. I just skip this. So when you see here in that first column, I have some references in which module I added a transaction, and some of these are already module 2, which is this, which we are going to have this Saturday. And I added a bunch of transactions here, like customer pays cash for 5,000 for services. So we basically got cash. It was services rendered earlier, so we have a trade receivable for that, and that transaction just closes the trade receivable. Okay, time is running fast. We actually have about 10 minutes left in the module. Please start sending your questions. I will do several more transactions right now, and then I will switch to a balance sheet from the accounting guidance. We didn't even do a module recap, so that's interesting. The practice took all the time. So customer paid cash for 5,000, so debit cash, credit, trade receivable. Then we issue a check for $1,800 for 3 months rent, and one was a current expense. So we already covered the rent which we spent on premises, and 2 months were in advance. So basically recognize part as a rent expense if we haven't already accrued for that. So we need to recognize that as an expense. Obviously, our cash decreased by 1,800, and our prepaid rent, the rest goes towards prepaid rent. And we recognize that prepaid rent as an expense in the next 2 months under accrual basis of accounting. We got a fire insurance policy, and I changed the conditions that it pays for the 2-year premium in the middle of the first year. Let me highlight that. So basically we already spent half of the first year of the premium. So it's here. So it's basically 6,000 divided by 2 years divided by 2 because it's a half of the year. I will add a comment here. Oops. Okay, what did I have there? I had prepaid insurance. So when we paid for the insurance and when we already used like a quarter of the term of that insurance under the accrual method, we recognize that amount as an expense. And then obviously credit cash, we spend cash for that, and then we debit the rest to the prepaid insurance. And when later we will use in the next period, we will use these prepaid rent. So we will debit rent expense and we will credit prepaid rent. And same with the insurance. We will debit insurance expense and credit prepaid insurance. Hopefully this is more or less clear by now. Is there anyone who joined the course for the first time today? If something is not clear, send me a message in Messenger or in Telegram or in a Q&A file, and I will do my best to respond, because the plan was that we will repeat a bit of a Saturday content today, but we dig into homework, and that's probably good because it's the best way to practice. The best way to learn accounting is to practice, and to practice it with some mentorship and supervision to be able to learn how transactions are done and where the guidance can be found. Okay, and speaking about the guidance, let's see my balance sheet balances. But let's go to a very complicated guidance. Here is the link. I was also attaching that link in all of my messages. This is 846 pages guidance on financial statement preparation. I don't know any person who kind of studied that guide. It was, you just use it from time to time when you actually need it, when you just get some problem. And if you move to the page 11, you will find chapter 2 balance sheet. Let me add some zoom here so that will look better. And we will go through some descriptions of the balance sheet, and I will highlight what is important. Maybe I can even do that. Let me see. Okay, I need to download that. Oh, I probably don't have Adobe Acrobat on that computer, so I won't be able to do that. I wanted to highlight some information. Okay. The balance sheet is one of the basic financial statements in a complete set of financial statements for both public and private companies. It is more formally referred as a statement of financial position. The term balance sheet will be used throughout this chapter. So officially, it is a statement of financial position. PwC will detail balance sheet presentation requirements. And we will see an example of the requirements which illustrates the requirements of SX 505. So SX is obviously Sarbanes-Oxley. If you want, you can Google what that regulation is. Balance sheet. So it's obviously the same information, but in a very less readable manner. Let's go back to the guidance. There is a accounting standard codification. So we have several layers of information, and I will probably do a separate module on that, or separate lecture or video. So we have accounting guidance from accounting firm, and in that accounting guidance, they summarize legal requirements for the balance sheet, and they also summarize an accounting standard, presentation of financial statements, and IC 210 balance sheet, which is kind of not a legal requirement. It's said by an accounting body, which is kind of a more like a public organization. It's not a law. It's just accounting standards. But sometimes a law will require you to adhere to accounting standards. And they also tell us that the accounting standards related to these, they are aligned with the SEC requirements. And they also list several other different requirements to the balance sheet depending on the circumstances. But let's move to more practical matters. So we have a illustrative balance sheet. And they say that captions not required by SEC but required by either GAAP or often included in the typical presentations are in regular form. If it's required by law, then it's in a bold font as SX 502. If it's optional, then it's a regular font. And here we see the picture which we usually see, which we have in our balance sheet, or which we saw in an Apple balance sheet, which we saw in IMC balance sheet. In all balance sheet we reviewed, we see kind of similar picture. So first one comes cash and cash equivalents. Then we have restricted cash, when it's a cash but you cannot actually use it as easily than your usual cash. Marketable securities, as you might remember, Apple had and still has a lot of these. Accounts receivable net of allowance, notes receivable net of allowance, net investment in leased property net of unearned income. That's a complicated item. Inventories, prepaid expenses, contract assets, I don't really know what contract asset is. I don't really know what contract asset is. Other current assets. That's fun. They still have place for other. If something doesn't fit in these categories, you still have other. So total current assets. Then we have non-current assets, which means that the maturity of these assets or the useful life of these assets is more than 12 months. Debt and equity securities, which you plan to hold for more than 12 months. Securities of related parties. Indebtedness of related parties, non-current. Other investments. Investments in unconsolidated subsidiaries. Derivative assets. Deferred income tax assets. That's an interesting one. When your business was making losses for several years, assuming you are a corporate taxpayer, not an individual taxpayer, a corporation, you are taxed like a corporation, you can deduct these losses from your future taxable income, and that will reduce your future tax liability when you are actually profitable in tax accounting. So the value of these losses, which you can save in the future, that's actually recognized on your balance sheet as an asset. Because that's actually, it will provide you with future savings on the taxes. So that meets the definition of the asset. Property, plant and equipment net of depreciation, that's pretty standard. Intangible assets, goodwill, other assets, if not included here. Let's move back to our homework file, and we have for assets. We have only 5 headers for assets. Our accounting is obviously less complex than the theoretical balance sheet. So as you remember, in bold you have headers, captions, which are required for you if you have any balances to report here. And they also link to the chapter in that guidance where you can find more details about these items. Let's see what we have on the liability side. On the liability side, accounts and note payable, which is pretty standard. Current portion of long-term debt, current portion of obligations under capital leases, income taxes, derivative liabilities, dividends payable, deferred credits, contract liabilities, other current liabilities. And for non-current, they have bonds and mortgages, indebtedness to related parties, non-current, notes payable, non-current, employee benefit plan obligation, deferred credits, deferred tax, other liabilities, and that comprises total liabilities. If you might remember, we discussed that we need, for every our asset and for every our liability, we need to present separately current part and non-current part. Okay, so these are all the captions. If you have any time and excitement to dig into it, you can kind of investigate a bit further, but 99% of accountants go in that guidance when they have like a real need. So if you want to come up with any complicated transaction in your business as a practice, as your homework or some future homework, you might want to pick up any of these headers and read about that a little, and kind of come up with transaction which can impact any of these lines. Let's look into the commitments and contingent liabilities, a redeemable preferred stock, and stockholders' equity, non-redeemable stock, common stock. So these are pretty complicated stock classes. We will not cover much of that in the lectures. Maybe when we are done with that course and I will do some smaller course on some exotic accounting items, then we might be able to cover it. But so far we just use retained earnings, common stock. We can discuss what additional capital is. It's when you get for your stock more money than the par value. Usually in United States everyone uses pretty small par value. So when you get $10 for a stock with 1 cent par value, $9.99 goes to additional paid in capital and only 1 cent goes to common stock. Non-controlling interest and total equity. We have a notes here. We are already run beyond 1 hour, so I will be heading to the end. So we have a reporting period requirements here. When you present your balance sheet, you need to present it with a comparative information. That means, so for example, if you presented a year 2020 in your balance sheet, your comparative period will be year 2019. So you will have 2 columns. And the data you present in both columns need to be comparative. So you cannot, if your business changed in 1 year, and then you need to present it on a comparative basis. For example, if you separated your company, then you might want to present your comparative balance sheet in the previous year as if that company was separated in the previous year. But that's some complicated accounting issues. We are just learning that they are out there, that such issues are out there, but we do not dig into details here. Chronology. It just says that you need to chronologically report the data, and if you present like a new year on the left, you need to continue to do so. It has an interesting, that's the interesting part. At what point does your operation become significant to reflect it in a separate account? For example, if we return here and we say we have, we probably have some current portion of obligations under capital leases. And that current portion is like pretty small. We probably can fit it into the debt, or maybe even into the accounts and notes payable. Or if we have some contracts liabilities which are very small compared to everything else, we can fit that contract liability into accounts and notes payable. But when do we kind of have to disaggregate the data? And they provide us with the guidance that current assets with amounts greater than 5% of total current assets. So if some class of assets, if it's more than 5% of current assets, if some class of current assets is more than 5% of total, you need to have it separately on your balance sheet. Any other assets which excess of 5% of total assets, if they are not properly classified in the existing captions, they should be stated separately. Notes receivable. If it exceeds 10% of total receivable, you need to show your notes receivable separately. Intangible assets. If they are more than 5% of total assets, you need to show each class of intangible assets separately. Same current liabilities, same way as non-current liabilities. So basically, let's say we have current assets, 5% of total current assets. If we move here to assets, and let's say everything is bold here. Okay, let's say contracted assets. For example, if our contracted assets are less than 5% of our total current assets, then these contract assets, they actually can sit in that other current assets account. But if they individually are 5% or more, we need to show them separately. And that might that situation might touch us in our trial balance. Like, for example, we have trade and other receivables account here, and we put in prepaids here, trade receivable, other receivables. Let's see, do they want us to show prepaids separately? Accounts receivable, net of allowance for doubtful accounts. They actually don't mention prepaids here. So let me ask myself a question here. Where are prepaids? So it might happen that we actually need to put prepaids in other current or in some other category, but I don't. In my practice, I remember we just called that line accounts trade and other accounts receivable net of allowance, and we kind of showed prepaids included in that balance. But it might happen that prepaids needs to be included as a separate line in here. Okay, so we covered the significance, classified balance sheet. So basically, that classified balance sheet means that we are required to present a working capital, reporting entity level of working capital, which is kind of a measure of liquidity and which shows your short-term liquidity. That's actually a requirement which requires us to separate balance sheet into current and non-current part. And they also define an operating cycle here. The average time intervening between the acquisition of materials or services and the final cash realization constitutes an operating cycle. You might remember that we saw operating cycle in the MIT lectures. That's good to know that all grade materials have the same material inside operating cycle. Here is a demonstration of the operating cycle: purchase of raw materials, manufacture, maintain inventory, sales, collect cash. Okay, offsetting. That's kind of complicated topics and it has some extra guidance. The basic rule is that you cannot offset your assets with your liabilities, and only in very limited specific circumstances. Like, for example, if you have accounts receivable from one customer and you have accounts payable to that customer, so one customer owes you money and you owe money to the same customer, you cannot offset these two balances. If these are contractually different balances, you cannot offset them. You can only offset it if you meet these four criteria. It can happen. In your homework, you might find something like that. Like if you buy and sell to the same customer, if you do not meet these four criteria, you should not offset your assets with your liabilities to that customer. Let's see. Okay, each of two parties owes the other determinable amounts. The reporting party has the right to set off the amount owed with the amount owed by the other party. The reporting party intends to set off. The right of set off is enforceable at law. So basically what they say that you and your customer should owe each other amounts. You should have a right to set off. Basically, it might be contractual right. You might come into contract with the customer to set off your trade receivables and trade payables. And you need to intend to set off. And you need to be able to enforce that set off. Non-controlling, so NCI and the private companies. So basically we covered balance sheet here. You might want to read that in more detail, and later on we will take a look at the income statement too, because our next homework will be about income statements, but we will look at it further. So it's not, as you might see, it's not that much of a lines in the income statement. If you have any questions, it's the last chance to ask a question. I will wait a couple more minutes for questions. I will remind yourself meanwhile that tomorrow we will have a similar discussion for today, but in Russian. If you are able to do some homework tomorrow, you have a chance that we can take a look at your homework. Svetlana did a good job. She did a great homework for today, and she come up with very interesting accounting problems, which should be a good lesson for everyone. So I advise you to use a chance and do your homework and ask for questions or for review tomorrow. It's a great exercise for everyone to review everyone's homework. You can kind of learn a lot from that, because I myself cannot come up with every possible type of transaction, and like I wasn't able to come up with what Svetlana came up with. So that's great exercise. I'm waiting for one more minute. Okay, I will also do a check on a stream quality. Was stream quality good enough? Were you able to see the numbers? Okay, probably 720p is just the best what YouTube can do for me. I wish I were able to stream in better quality, but for some reason YouTube only allows 720p. Okay, thank you for a great day. Thank you, Svetlana, for your exercises. Hopefully you were able to learn something new today, and I wish you productive rest of the week. See you tomorrow or on Saturday, and have a good night. Bye bye.